All right, welcome back to the Double Play channel where I show you how you can put your money to work in two places at one time by leveraging the cash value of a maximum overfunded life insurance policy. Today, I'm going to be addressing a question that I get all the time, and that is, can I have multiple life insurance policies? People know that their incomes are going to go up over time, and they just want to know, can I put more money into a policy? Can I get second policies? And the answer to that is yes. And what I'm going to do with the rest of this video is just show you some of the best places where you can place that cash value and get the most bang for the buck and take care of your life insurance and death benefit protection needs. I don't often talk about that here, but stick around after the intro and we'll get started. All right, thanks for sticking around. I'm Tom Rutkowski with Innovative Retirement Strategies, and I'm a life insurance agent, and I specialize in designing maximum cash value life insurance policies for use in real estate investing. And the goal of this channel is to give you the answers to all the questions that you might have so that you don't need to talk to a life insurance agent. The only time you should need to talk to me is when you want to see the numbers for yourself. Before I get started, let me just cover a few of my standard disclaimers. Be sure to like and subscribe to this channel so that you're notified whenever I come out with any new content. The purpose of life insurance is for the death benefit protection, and the other benefit is purely ancillary. This content is purely educational in nature. It's not intended to be financial advice, legal advice, or tax advice. And one last thing is I've got a new interest, which is helping people with their health and nutrition and just passing the underwriting. So be sure to check out Radical Recovery. It's a Facebook group that I set up to give you health and nutrition tips to help you reverse many of the conditions that too many people have today. So today I'm just answering the simple question, can you have multiple life insurance policies? And the answer to that, of course, is yes. And what I intend to do with the rest of this video is to show you where you should put that extra money. As you get more in savings, you want to get it into a policy. Where should you put that money? Policies on spouse, kids, where to best utilize the extra death benefit protection that you're getting. All right, some of the fundamentals for this video would be the video that I have on life insurance retirement plans and the video that I have on minimum and maximum overfunded policies. I'll be talking a little bit about both of those things in this video. So it might, to have a good understanding of how they work and what they are, you might want to check out those two videos. All right, so let's get started. I just want to start off by stating that the most of my business is geared towards maximum overfunded life insurance policies. Most of my clients are doing the double play, which is leveraging the cash value of a maximum overfunded life insurance policy for investing in real estate. Or they're interested in life insurance retirement plans. And both of these require policies that have the maximum amount of cash value that you can possibly get in them. And when I design a maximum overfunded policy, I'm basically solving or working backwards from the premium that the client wants to put in or contribute to solve for the lowest possible death benefit that I can get for that amount of premium. And the problem that we have is these policies cannot take any more premium without violating the definition of life insurance, which is just having too much cash, not enough death benefit. So in order for my clients to be able to put more money in as their income grows, the solution is to either modify the existing policy or to get extra policies going. Another point about this is that these maximum overfunded policies, again, have the lowest possible death benefit protection. And oftentimes that's just not enough for a family's life insurance death benefit protection needs. So what I recommend is that you use cheaper term life insurance to supplement. So one of the first things I want to start off by saying, can you have multiple life insurance policies is yes, but when you get going, you should take care of your family's death benefit protection needs first. And then as you get more savings later on, you can add additional policies and even supplement that with additional term life insurance. All right, so where do we put that extra death benefit protection that we're covering? Well, the first place would be on your spouse or partner. And that's because you might need protection as well. I'm a guy and I'm speaking from a guy's perspective, but when I was married, I'm divorced now, my wife stayed at home and she raised the kids, but that didn't negate the need for life insurance. If something were to have happened to her, I would have had to pay to take care of the kids. I was in a job where I was traveling around every single week for business, and that would have been almost impossible without a nanny or somebody to take care of the children while I'm out traveling for business. And the other thing is, in families where both parties work, it could be that you need both parties' income in order to pay for the mortgages and the household expenses, the car payments, and everything that you need. So you need to have death benefit protection on both parties in a family, both adults. And to the extent that the permanent policy doesn't offer enough death benefit protection for you to cover at least 20 times your own income, then you should probably supplement that with term policies to get there first and then reduce the amount that you're putting into savings. Where did I come up with the 20 times number? Well, if you had 20 times the amount that you need per year, the idea is that you could go out and buy an annuity that could generate enough to cover or generate that same amount of income for the rest of your life, or for your wife or kids, or if you're a woman, for your husband. The next place that we would want to put a policy is on our children. And the few things I want to say about children is, losing a child would be absolutely terrible, but there are financial losses associated with that too, burial costs and more. But a lot of people want to start up policies for college planning purposes. And the thing I want to say here is that keep in mind that life insurance companies typically have rules in place that require that the death benefit on the children's policies can be no more than half of what both adults, parents, have on themselves. And the other thing to keep in mind is, because children are typically young, that death benefit protection is very inexpensive. So you may not be able to put as much into policies on children as you might expect. And if you're intending it for use for college planning, you definitely want to supplement that with policy on yourself. In fact, I kind of recommend that if you're using life insurance for college planning, you should definitely put that coverage on yourself before you put policies on your kids. You can use the policies on the kids to supplement the college funding if it's necessary, but with the policy on yourself, you can at least make sure that your children are taken care of if something were to happen to you, or your wife for that matter. Again, in most households nowadays, both parties work and both parties' income is necessary in order to fund the household expenses. So we don't want to lose the house. We want to make sure we can keep on putting food on the table, that you don't need to sell the house, that the surviving spouse doesn't need to sell the house to continue paying for expenses. So put the death benefit protection on yourself to make sure that your kids' college is paid for if something happens to you or to the other spouse. And another thing to add is that most life insurance companies do not sell term insurance on children. I'm not aware of any, but I'm not sure that every single company out there does not offer a term policy. All right, so once you've put a policy on yourself, you've put a policy on your spouse, you've got policies on each of your children, and if you're still looking for more policies, more places to put life insurance, death benefit, or just money that you want to put into savings, the next one would be a survivorship policy. These are also known as second to die policies, and they cover two lives, as the name might imply. And the policy pays when the second insured dies. So there's no death benefit until both parties that are insured pass away. I just want to be clear that this should not replace primary policies on each spouse partner. You definitely want to make sure that each of you are covered and have a source of income to cover your financial losses if the other partner were to pass away. This is more for estate planning and just making sure that you can put money into a trust if both of you and your spouse were to pass away in one accident. And one thing that I'll add to this is that in survivorship policies, the cost of insurance is typically much lower because it's covering two lives. And we generally end up with a policy with greater cash accumulation potential than a policy that's on a single life. So that's one thing to keep in mind here too. All right, and lastly, I want to talk about business policies. This would be key man insurance, partnership buy-sell policies. You can use policies for bonuses. And as far as key employees, you want to have policies on your key employees to pay the business to make up for any revenue that might be lost from their loss. In a partnership buy-sell agreement, that's where each partner in a business puts a life insurance policy on each of the other partners. And what that does is if any one of those partners dies, you would have the money that you could use to buy out the partner's spouse's interest in the business that they would inherit. So unless you want to go to work for your spouse's wife or partner in business with your spouse's wife, every single business out there should have a buy-sell agreement in place if there are multiple partners. And then lastly, life insurance can be used for deferred compensation strategies. It can be used for, you can bonus an employer, a keen employer, an executive with a life insurance policy where the benefit might be paid to the business. They could keep the death benefits. The company could keep the death benefit and be essentially paid back. There's a lot of different ways of structuring that. But these are just some of the uses for life insurance in a business. And the company in each one of these cases, keeping in mind the need for the death benefit protection, could access the cash value for business needs if it's necessary. Just understand that any policy loans need to be paid off from the death benefits when the partner dies or when the insured dies. All right, so just wrapping up, the primary goal of this video was just to show you that you could use multiple policies to put more money as your income grows and you want to get it into life insurance policies. You could put it into multiple policies. And what I really want to do was show you where you can spread some of that death benefit protection around to get the most bang for the buck. So that's all I have on this subject. I hope you enjoyed it. If you're hungry for more information and you're not ready to talk to a life insurance agent yet, I highly recommend going out to Facebook and joining my double play group there. That's a community of people who are doing the double play or are interested in it and there to learn. So I highly recommend doing that. My website is full of information. I've got blog posts that correspond to most of the videos that I have out there. There are literally many dozens of recorded podcasts available on the website now, as well as links to all the YouTube videos that I have too. So again, be sure to like and subscribe to this channel. And if you're interested in supporting me financially, there's a link to buy me a coffee down in the bottom where you can provide a financial incentive to me to keep providing these videos for you. And with that, I will see you in the next video.